Although US President Joe Biden declared a state of emergency in the country due to threats to power generation capacity, oil prices failed to extend gains. Currently, the quotes are trading just above $120 per barrel. To some extent, this is due to the fact that in order to solve the problems that had arisen, the White House decided to waive tariffs on the solar panels imported to the United States and not to promote an oil output increase. However, the risk of a power shortage certainly contributes to higher oil prices. Apparently, this situation supported the quotes and did not let them go down. Indeed, oil prices have fallen almost 20% over the past months. Thus, a local correction is overdue in the market. It's clearly needed to address imbalances and create preconditions for further growth. In this case, buyers are likely to face resistance in the form of a local high posted on March 23 at the 123.75 level. Despite the fact that the risk of facing a full-fledged energy crisis is creeping up, demand for safe haven assets remains subdued. In particular, gold prices are still trading around 1,845, while just a few days ago the yellow metal was worth over 1,870. This indicates high uncertainty among traders. It can be assumed that gold will continue its range-bound trading between the levels of $1,830 and $1,870. Thus, the best tactic is to trade with a view to breaking through one or another boundary of the range, which will help traders determine the asset's further direction. For now, there are two possible scenarios suggesting a resumed downtrend or continued correction. The shortage of energy supplies contributes to high demand for strategic resources, while safe haven assets and not demand them. Gold will not ensure power continuity or smooth operation at gas stations. As long as the situation in the energy market is challenging, gold has limited upside potential. In the best-case scenario, the metal may see a local rebound. Meanwhile, the ruble was affected by Joseph Biden's decision to declare a state of emergency. Once the White House released the document, the Russian currency began to edge up, posting solid gains. However, then the price pulled back. The point is that the Biden administration abandoned its plans to promote oil output rises but moved on to the measures aimed solely at boosting solar energy in the United States. Thus, the ruble remained unchanged. In fact, the Russian currency has been standing still around 61 rubles per dollar for the second consecutive week. Most likely, the current range-bound movement will continue until the next meeting of the Bank of Russia to be held on Friday. Regulatory officials are expected to step up their efforts to ease monetary policy, which may steer the market. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.